Hello, hello. So Meta shares are actually collapsing right now after they reported their latest earnings report because of a weak forecast and an earnings miss as well. So they did rather badly here and are expected to continue doing badly for a while. Now you will see here that their headsets, their company's Reality Labs division, that is, lost over $9 billion, and that's obviously the metaverse, which is losing more and more money, and it's becoming a sinking ship for the company. Now the company as a whole is great in terms of advertising, but they are having some weakness there as well, and so this is why you're looking at plummeting stock price right now. Now, the stock plunged in extended trading is down at about 20%, and we can take a look at it using our tool. You'll see here that it's down 20% right now, sitting at 105, almost 104 over here, which is an insane decrease and frankly extremely cheap. Now, based on what is happening right now, it could go even lower. I never expected to reach this price, frankly, but it did. And based on what they have reported and based on the current sentiment, most importantly, it could actually go down even more. And right now, I think it's an insane opportunity. People are basically selling a company that is making tons of money, but that's what happens in various markets. Okay, let's go back and take a look at what is going on here. Earnings per share $1.64 versus 1.89 that was expected. So that is a significant decline here. In terms of revenue, 27.7 billion versus 27.38. So they did beat on that. But the thing is, you can make revenue, but if you are losing money, that's not great. And of course, you can expect the stock to go down. Now, daily active users are about the same as expected. Monthly active users are a little bit more than expected. And average revenue per user is actually a little bit less than expected. Again, something that you would expect to decline right now. Now, there is a slowdown in online ad spending. We have noticed that in all sorts of advertising networks, like for instance, Google has been slowing down as well with YouTube. And again, it's kind of to be expected while the stock market is crashing and the economy is pretty much crashing. Challenges from Apple's iOS privacy update. And in case you haven't seen the news about iOS and Apple, I should say, you can take a look at this one here. So Apple takes a bite out of Q3 earnings here. And this is interesting because this is something that just came in basically a couple of days ago or so. Apple's data policies weighted on Meta's results contributed to negative growth. Just before the release came out, Apple took another bite out of Meta sales by taking a cut of social media ad revenue. Let's take a look at this one. So you can kind of see it here. In another blow to Meta, Apple demands 30% cut from promoted social posts. And as you'll see, Apple released an update to its payment guidelines Monday, demanding that apps use the company's in-app purchases tool for boosts and promoted posts, which means Apple will take 30% cut of sales. The move seems to be another policy squarely aimed at Meta. So this will definitely hurt Meta as well, and this is again one of the reasons why the stock is down. Now let's go back and you will see here that the company said revenue for the fourth quarter, that's guidance, will be 30 billion to 32.5 billion, and analysts were expecting sales of 32.2. So we're probably sitting at this range, and this is probably going to be at the lower, probably I suppose, probably at the lower side. We'll see, of course, and this is why the guidance is generally speaking considered to be negative, of course. And it's interesting to see that during the stock market collapse, we are reaching a price for Meta that it hasn't been seen since Trump was in the office. As you'll see, Meta is trading at its lowest since March 2016, which was 8 months before the election of Donald Trump as president. So now that's another achievement of the Biden administration, I suppose. So revenue in the Reality Labs unit, which houses the company's virtual reality headsets and its futuristic metaverse business, fell by almost half from a year earlier to 285 million. So its loss widened to 3.67 billion from 2.63 billion. So they keep spending money in this thing. And this is one of the main concerns that investors have because this is a speculative investment. We don't really know whether it's going to do well. And the market doesn't really love speculation. Now, amidst this current environment where the advertising spending is going down as well, then you are getting a picture of a company that keeps declining in terms of its stock price. But the thing is, if you forget what is happening right now and just think about it in the long term, this is definitely a company to be buying. There's no doubt about it in my mind. And if you take a look at our tool here, you will see that currently, before this crash, this 20% crash, we are sitting at a P ratio and a price to free cash flow ratio that is about 10 and less, 9 to 10. And right now, after a 20% drop, it's going to be less than that. It's going to be like 7 to 8, something of that sort, which is outrageous for a company of this caliber, of course. Now, yeah, sure, they are losing some revenues, they're having some tough quarters, they're having the current issues, but the decline has been insane. It's gonna be like 80%. And as you can understand, this is definitely a time to be buying for the long term. Now, I'm not saying that this can't go lower. It could definitely go lower. But think about it in a little bit more of a sane manner and forget about what is happening right now in the markets. Is this a company to hold for the long run and just pretty much buy and forget what is happening right now in the markets? I think so. And the thing is, you can buy now and see the price go down, but you can buy down and see the price go up. You don't know what's happening when you are buying today. The thing that you know is that in the long term, this is looking like it's more than likely going to go much, much higher than what it is right now. Again, if you forget the current sentiment, because during a negative sentiment season or a period, anything goes and stocks will go down. This is what happens in the markets. It's basically exactly what happens during bearish markets. And after a while, everybody forgets about it and you go back to normalcy. Now, will this get dragged even down, even more down? It could, definitely could, because again, as it's been falling, it's all about fear. People are getting scared and they keep selling. And so as they keep selling, prices go down. Institutions keep selling because they have to appeal to their investors. And so prices could go down even more. And if you can get it at an even cheaper price, I mean, why not? I myself, my cost basis has been at about $158, and seeing it this right now, I'm basically really considering about adding some. But I do have a lot, and I have to rethink about it. I do feel that this is an insane price, though, I have to say. Now, if you take a look at our pretty much at the financials of the company, you are looking at a decline. Yes, is what we examine. Like for instance, you will see here they had an earnings per share of 1.64 versus 1.89. So sure, they had a little bit of a drop, like a 10% drop or something of that sort in terms of the earnings per share. But if you take a look at the picture, at the overall picture of the company, the bigger picture, what they have been doing financially, you can see that they have been increasing the revenues at an insane pace, like from 40 to 118 over here, and same thing with the net income, like from 16 to 40. And so, as you can understand, they have been doing better and better. And again, during a little bit of a decline, and in this current environment, pretty much every stock has been completely annihilated. And this one is becoming a fantastic opportunity, no doubt about it. And the balance sheet, again, similar story. You'll see here that its total equity has been growing from 74 to 125. And cash flow statement, again, from 17 to 40, pretty much a cash flow machine here that people are selling off, again, because of fear. Now, I'm going to take a look at our stock evaluation tool, of course, just to see what it makes sense to be paying for this one. Obviously, we have a revenue growth decline here, is what we're seeing. And I'm gonna, for the sake of the argument, I'm just going to go with revenue growth of 0% in all cases here. So let's just say that Meta doesn't grow at all. And I just want to show you how cheap this is. So Meta doesn't grow at all for the next 5 years. It stays where it is right now. That's 5 years from now. That's not just for 1 year, right? So that's 5 years. That's a long time. And net income margins, let's just say that they also go down a little bit. They go like 20, let's go 27, 29, and 31 here. Like significant decline as well. Free cash flow margins, let's just use maybe 85 here, 90 and 95. And an annual return of 13% for Meta. And obviously, these are very pessimistic projections here, like insanely pessimistic. And if you take a look at these insanely pessimistic projections here, Meta's low price to pay for it today is $134, and the high 172. The current price is actually going to be 105. So, I mean, for me, this is like an insane buy over here. Basically, buy and forget. This is insane how cheap it has gotten, but it is what it is. And I'll obviously be taking a look at what is going to be happening with Meta in in the next videos that I'm going to be making. But right now, I think that this is definitely an insane opportunity for for the long-term holder, pretty much. Now again, will it go even lower? Maybe. It's possible. It's actually possible, I think, that it could go even lower. I would think that we can even go down to 100 or less potentially, since we are reaching that level. I never thought it would get there, but once it does, things can go even lower. As a long-term investor, this shouldn't really rattle you that much, apart from the fact that you may not have bought at the lower levels. But again, you cannot know that when you're buying. You can only have, how do you say, like hindsight is 2020, right? Like if you knew it would happen, yeah, of course you wouldn't buy, and you would wait. But nobody knows when the bottom is, and nobody knows how far the companies can grow in a week. Remember that. In many situations, these kinds of companies can have a significant decline, and then in one week gain 25% or 30%. This happens a lot in the stock market. Same time that you can decline 20%, next next 3 months it could be a week that you go up 30%. So if you enter and exit the market all these times, you can actually lose a lot of money. And this is why buying and holding for the long run is the best thing that you can do, and basically forget about it. Now, the thing is, always remember that you need to be investing money that you don't need. Extremely important. Just invest money that you don't need. The cash that you have that is extra. This is the only cash that we invest in the stock market, not the one that we need. And just set it and forget it, and just take a look at it in the next 5 to 10 years. But thank you for watching. Tell me what you think about Meta. Will this decline continue? What do you think? Are you a buyer? Are you a seller? Just leave a comment below. I'd love to hear your thoughts. And I'll see you in the next video. Bye-bye for now.